Hello everyone. Today's topic of our lesson will be the trading plan, specifically the structure of context and hypothesis formulation. That is, we will be covering a more in-depth topic and will not delve into the basic concepts that we have already discussed in previous lessons. Therefore, if you haven't watched yet, the basic lessons, the basic course on smart money available on my channel, be sure to watch them before this video. Well, today let's get started with the analysis. Today, as I mentioned, we will cover two main points of our trading plan: how to structure our trading, specifically context determination and hypothesis formulation. In what format am I saying this? Today, and in general, we will be formulating a hypothesis and determining the context in a format that starts with the higher time frame and ends with the lower time frame, based on the variables we will analyze on the chart. But before that, let's understand the overall plan and how our entire analysis is structured. Defining our narrative and entry into the position. So, initially we determine the context. Today, we will delve deeper into this understanding, so we will return to this topic. Next, we propose a hypothesis on each time frame, starting from the higher one and ending with the lower one, meaning on each time frame we propose a hypothesis that we will need to confirm in the future. Using essentially a setup, if there is a good setup or formation on the chart, additional support areas and so on, this will confirm our hypothesis, which will lead us to be able to enter positions. Well, after that, essentially we can analyze the news background, meaning we can review what news is out there so that it doesn't happen that we enter into positions during very important news like NFP, inflation, or interest rates. So let's not dwell on this and move straight to our first 2 points, namely defining the context and forming a hypothesis. So, what is defining the context? I think you basically understand, but you must clearly understand that you need to consider all variables without any bias, starting from the higher time frame down to the lower time frame. What does this mean? This means that, hypothetically, we take the given situation, we notice that the price is moving in an uptrend, creating a consolidation. At the same time, we have a positive variable for the long trend. Since we are in an uptrend, we take this into account. We have the first variable, which is the uptrend. Next, what do we see on the chart? I note that we have here POE and HTF, and we have a consolidation where the price leaves a good shelf of liquidity below. That is, the price creates a deviation, removes this shelf of liquidity, and tests the HTF POE. In principle, there are enough variables here to cross out this entire long trend and understand that the price is more likely to move in the direction of this liquidity below to remove it and get a refuel. And only after possibly considering all variables, we can say that the price will reverse and continue the current trend. But for now, we propose a hypothesis at point A, that is in our POE, where the price is currently located. In this format, we will analyze the chart, where this movement, which we expect, will be our hypothesis. In what format, essentially, is the analysis conducted? As I mentioned, we should consider, essentially, our analysis is without bias. What does this mean? This means that if we take XTF as a monthly time frame, and if we have determined, thanks to the variables we marked on the chart, that the trend is long, it should not affect our decision on X1TF, which in this case is the weekly time frame. On the weekly time frame, we must also analyze the chart without bias, not seeking confirmation of the long trend, but rather exclusively looking at the changes we see on the weekly time frame to make our decision. In this format, you should continue to determine the context up to your last time frame, that is, the XN time frame. Everything depends on your strategy and how you adapt to it. Basically, that's what I just pointed out. In this case, let's see, we will conditionally consider this as the weekly time frame. The price is in the current trend, and is testing the weekly support area. No long positions, basically. We do not see variables on the chart. Therefore, we can clearly say that in this case, we have a sufficiently good formation to say that the price will move lower. That is, we have a bearish narrative. In this case, we switch to the X1TF and see a completely different situation. The price moved down, created a small consolidation and a liquidity shelf above, then made a manipulation downward and with a sharp movement recovered, creating a support area in the form of an imbalance. This is a simple example where, in principle, the XTF contradicts the context on the X1TF, and you should pay attention to this rather than saying something like, well, the price took out liquidity, so it must go lower. No, you should impartially determine in which direction. With a higher probability, the price will move on this particular time frame. In this format, today we will essentially establish the context and go through a couple of examples. Well, let's start with a fairly simple example so that you can understand the decision-making algorithm, how to build your narrative, determine the context, and essentially what you need to pay attention to. So, we will start with the monthly time frame, taking it as the higher base time frame, and focus on what we need to pay attention to. First of all, we need to determine essentially where the price is currently located. We see that the price initially moved in an upward direction, then reversed within a certain range and began moving in the current trend. In the process, forming support areas in the form of imbalances, simultaneously testing and filling them, which indicates a healthy current trend. And now we can determine that there is an obvious target above the price in the form of a monthly fractal, and there is another target also in the form of a monthly fractal already in a more local movement. At the same time, we can also note that in this case, the price, as you can see, does not reach this fractal because it encounters resistance from this rejection. That is, the price encounters resistance within this rejection, and this tells us that the price needs to go for a refuel. Namely, to remove some pool of liquidity, in principle, in this case, it's a monthly fractal, and possibly test some support area. In this case, the nearest support area on the monthly time frame will be the rejection by block. But in such a context, we cannot say for sure that the price will leave these levels. In the long, therefore, we need to wait for additional variables, namely, for example, a test of the rejection block and the removal of this fractal. This will give us more opportunities for making decisions. So we move to the weekly time frame and determine the context. In this case, on the weekly time frame, the situation is quite similar. Additionally, it can be noted that the price creates a low resistance liquidity above in the form of equal highs. It also removes this triple bottom that we have formed. We have the first support area in the form of a weekly imbalance, the second in the form of a weekly order block. That is, we have a weekly swing OB, which acts as a key support area in this trend, but with a good setup. If the price does not reach this OB, the price may test this inefficiency and move higher, as it will remove a large pool of liquidity, test the support area, and may move without testing this single OB. But why am I not marking it? Because the price actually went lower. With quite a volatile movement, there couldn't have been any setup here indicating that one should enter from the FWG. Therefore, we will build our plan based on the fact that the price is within the weekly OB and simultaneously testing the rejection block on the monthly 3-frame. What can we note? First, we can note the overall upward trend. This is the first variable. The second variable, the removal of an important fractal, both monthly and weekly, in the form of a triple bottom and in the form of a monthly fractal. Also, the test of the support area in the form of a rejection block and OB. And the fourth factor for us, or variable, will be the liquidity from above in the form of low riskness liquidity. All of this gives us sort of the ability to say that with a higher probability, the price will move in the direction of this price. Liquidity. As the price received a refill, the price tested the main zones from above. There are targets that the price has not reached on both the monthly and weekly time frames. Therefore, in this case, we define an upward narrative or context. In principle, which is what happened, the price retracted from this zone, after which it moved in the direction of, in principle, our main back target. Well, let's now analyze more complex examples. Namely, let's examine the Euro USD, a chart within consolidation, and how to act when making, in principle, a decision, and how to build your algorithm. Decision making with such a chart. So, first of all, what can we determine on the chart? We can determine that the price is moving in consolidation, meaning the price does not have a specific trend. However, if we consider this movement, we can clearly highlight that the price reaches, first of all, an important fractal in this case. That is, the price has reached a monthly fractal and is trading within this rejection block in the form of a rejection block, and we have the achievement of a monthly fractal. We have noted this. What else can we note? We can note an obvious long support area in the form of FWG. We have an FWG, a monthly FWG, which acts as a fairly strong support in this area. And most importantly, we must note that the price reacts to this fractal by being fixed with the candle's shadow. That is, we can conclude that the price cannot break this level because some sales volumes are being injected, so that the price is fixed with the candle's shadow. In principle, this tells us, and is a key variable on the chart, indicating that the price, in this case, should go for a refuel, with the aim to test this imbalance and possibly under certain variables. And with a favorable context, the price may reverse and move towards higher targets. For now, we can notice that the price is trading in a range, has approached the upper boundary, is testing the rejection block, and is removing within this rejection block a fractal giving a reaction to it. Below, we have an obvious support area that should be tested and fill this imbalance. In principle, all these changes indicate to us that the price in this case is more likely to go for a refuel, lower, and test this imbalance. In principle, on the monthly time frame, we have already determined the main narrative, the main context, and we only need to see confirmation of it on the weekly and daily, and maybe the 4-hour time frame, working in the same format. So, moving to the weekly time frame, what can we note? We can note that the price is removing a significant amount of liquidity. In this case, it removes liquidity before this and reaches such an initial main target in the form of this fractal. After which, it creates, after testing this fractal, that is, removing this fractal, the price goes to refuel, that is, it creates an absorbing such a rather volatile candle, which has an effect on the fact that in this case it has flowed in. And it goes for refueling into the FVG zone. It tests the weekly FVG and moves higher, while removing the weekly fractal in this case. This candle and consolidates in the same way with the shadow of the candle, indicating the buyer's weakness and additional weakness at these prices. And importantly, it does not create any support areas below. That is, it filled this imbalance, moves higher, and does not create additional support areas on this chart. Therefore, we should switch to the daily time frame to confirm our hypothesis. What can we see on the daily time frame? We see an obvious movement in the form of consolidation. At the same time, The price creates a deviation above and consolidates again, with the candle's shadow already on the daily time frame, what tells us that the price is more likely to move to the lower boundary of the range. At the same time, an additional factor is the low resistance liquidity or compression, which persists at the high of this range. That is, before the sweep, the price accumulates a liquidity from below, and after the sweep of this range, it would be obvious to expect the achievement of the lower boundary of the range. Initially, of course, our goal will be this low resistance, and our ultimate goal will be to reach the lower boundary and test the monthly imbalance, which we noted earlier. In principle, it's quite an interesting example that we have analyzed, and now let's observe its execution. The price creates a repeated manipulation, also consolidates with a shadow, after which it breaks through this incline, removing this low resistance liquidity, and after a short time reaches our main initial target. In conclusion, I would like to say that this is the foundation, and if you cannot determine in which direction the price will move, then you should not enter any positions at all. Therefore, your task now is to backtest the chart and forecast the price movement. But if you liked the video, give it a thumbs up and subscribe to the channel. Also, subscribe to my Telegram channel, where constant analysis and all information are published. Thank you all for watching. Goodbye.